we also saw the government come out and tell us that we are technically in a recession. So what do I mean by that? Technically in a recession. Well, they said that we're technically in a recession based off of the numbers they put out, but then the Biden administration, White House, was very quick. As a matter of fact, even before the numbers were released, we're starting to tell us that the definition of a recession isn't what the definition of a recession is. So you're starting to notice, hopefully you're starting to notice, that they're constantly telling us what we're seeing and what we're hearing and what we know isn't what we're seeing, hearing, and knowing. So, for example, the CDC went to their website and changed the definition of what a vaccine is. It used to be one thing, now it's another, because now it fits what they want it to be. So never mind what it's always been. Never mind what the definition is. We're just going to change the definition, right? The chant that goes around still at stadiums around the nation, "Let's go Brandon." I mean, where that originated was at this NASCAR race, and there was a reporter talking to a driver, and the crowd was chanting the F Joe Biden. I don't know if hopefully I can say that. And the reporter's like, "Oh, they're saying let's go Brandon." So even what you're hearing isn't what you're hearing. You're hearing something different. What you're seeing is something different, right? And it's called gaslighting. And so now, the GDP went down for a second straight quarter, which fits the definition of a recession, but they came out days in advance telling us that it's not a recession. Because it's not just that. There's lots of other factors, like like job growth, like the job. That's a big one. And look how much jobs have grown. Well, if you look at their one single data point that they provide you, maybe you could believe that. But if you look at the broader data, you see that that's a lie as well. And so it's important to kind of understand what's going on. This is all part of it. So not according to the White House, but according to most economists, the economy is in a recession. 2 quarters in a row. That means 6 months with negative GDP growth. Now, the GDP growth is the size of the economy, the gross domestic product of the economy, and it's supposed to be growing. We're supposed to be doing better. We're supposed to be producing more goods and services. Now, the GDP indicator is a big scam in the first place. The GDP is gross domestic product, but it doesn't really tell us much good data. And the reason why is because, let's say, for example, if we sold 10 computers, let's say, because the economy is made up of producing goods and services. So let's say that we produced 10 computers this quarter. And next quarter, we also produce 10 computers. Well, the economic growth hasn't changed. 10 computers before, 10 computers now. But the problem is we have massive inflation. The prices of all those things are going up. So we sold 10 computers for $1,000 each, or $10,000. Now we sold 10 computers for $1,500 each, and we now $15,000. So GDP says, look, GDP grew. We grew from 10% to 15%. That's amazing. That's a 50% increase in GDP. Hooray, hooray. But it's kind of a lie because we just sold the same 10 computers. No growth in the economic output. That's one example. We also have the amount of government spending. And so today, government spending makes up about half of GDP as well. And so it's important for you to understand this fact is that the governments cannot create anything. The governments cannot give something they have not taken. Let me repeat that. The governments cannot give something they have not taken. All they can do is redistribute. So let's say that I made $10,000 for the month, and then I pay my wife $5,000 for her work cleaning the house. Then I might say, hey, hooray, now we're making $15,000 a month. I made $10,000. My wife made $5,000. And that's how the GDP works. But the reality is we didn't make $15,000. We still only made the 10. All we did was redistribute some of the wealth that I had gotten, and I gave it to her. See how that works? So the GDP is a manipulated number, and it should be going up, especially with inflation raging so high. But yet it went down. It's a big deal. It's a real big deal. the government is hoping to stimulate the market. You hear about these stimulus programs. And so when they shut the economy down, thinking it's like a light switch that could just be turned on and off, of course, we're finding out now that it can't be. People like you and I, we always knew that the case. For some reason, they thought they could do this. And now we're finding out that we have massive problems from just turning the economy on and off like a light switch. And so we went from 3-4% GDP growth, which was kind of the rate of inflation that we had, to now having 2 quarters in a row with negative, not just slowing. So we didn't go from 3.5 to 3.2 to 3.1 to 2.5. We went to negative 1.6. Now, the markets responded favorably to that news because it actually wasn't as bad as what was predicted. So we were expecting another negative 1.6, and instead we got a negative 0.9. So hooray, 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 we beat the estimates, and the market rebounded. We saw most of the stock market rallied off of that news. We saw the S&P 500 bounce pretty well. As a matter of fact, since that announcement, it's up about 3.5%, which isn't massive, but for the S&P 500 it is. And it's continued to do good since it's about a month ago. We're up almost 12% on the S&P 500. The NASDAQ, which is way more responsive to this, is up about 5% off of the news. Not bad. And from its low about 2 months ago, it's up almost 30%, a 30% bounce. And so the markets are forward-leaning. They're trying to predict where things are going. They were predicting that things would get worse, and yet they were bad, but not as bad as they were predicted. But what does that mean for other assets? How the economy's in bad shape. It's in real bad shape, but it's not as bad maybe as what we thought it was. And so that's a good thing, I guess. And so I talked about how the NASDAQ and how the S&P 500 reacted, which was good. And Bitcoin actually had a pretty good response to it as well. As a matter of fact, the Bitcoin market had its single biggest day gain in 6 weeks, which was a pretty big deal based off of that news. And so we saw Bitcoin has jumped up about 13%. Based off of that news. So not bad, especially considering the S&P and the NASDAQ. And basically, like I said, it really moved off of the news of this for a couple of reasons. We saw the Fed come out and change the price of money, and we saw less bad news than what we were expecting, I guess, those two things. And the reason why Bitcoin is so sensitive to that is because it's considered what's called a risk-on asset, so sort of like tech stocks. And so in a risky environment where things are looking shaky, when we don't know the future, when things could be crashing, those risk-on assets will do bad. But when it's game on and the Fed is doing massive amounts of stimulus, and those risk-on assets do really, really well. But like I said, this data that came out both from the Fed and from the GDP. So Fed Chair Jerome Powell came out and said, quote, that he's going to stay data dependent. And that looks like it signals a sign that they're worried about a recession. They want to stay data dependent. It also looks like maybe they're expecting inflation to start dropping pretty quickly. And so it's kind of a way to say we have our options open. They were very dug in. It was something that I was afraid of. They were very dug in on their position to get through all these rate hikes that they want. And the problem that I fear is that the Fed seems to be pretty dug in. Like I said before, they really want to project way out what they're going to do. They don't want to have any surprises. And so they say, hey, if we're going to raise rates, we're going to give you a couple of months notice that we're going to do that. And so they don't want to have these surprises. And what happens is he had said going back to 2019, really 2020, we can't get the inflation. We can't get the inflation. We're gonna quote, let it run hot. And so they did. They let it run hot. They just let inflation run hot. And it got way too hot. They should have pivoted sooner, but they had told us they're going to let it run hot, and they kind of had to do that. They were dug in that position. I'm also afraid that once they commit to doing all these rate hikes, they might be dug in on that, but it looks like they're coming off of that now. So it'll leave some of my fears, as well as looks like for the market as well, by him saying that they're data dependent. and said that, maybe there might be one more hike, but depending on what the data shows, there might not be. And so this is that pivot that everybody's starting to look for. Could this be the pivot?